In this video, we have a lot to talk about, a lot to go over, and that's because just as of recently, I changed my mind on one of the ultra high yielding, pretty popular income-oriented ETFs that for a while I wasn't really interested into. But because the way the market is shaping up, especially towards the second half of this year, I have become more interested in this ETF and even started purchasing it on a daily basis. Now, this ETF is an ultra high yielder. It offers north of a 70% yield. And as you guys know, for the most part of my long-term portfolio, I don't really mess with many ultra high yielding ETFs. I own a few here and there, but for the most part, ultra high yielding ETFs, in my opinion, are pretty much junk. That's of course, unless you pick a few of the good ones, in my opinion, to hold on to. So in this video, we're going to go over this ETF. I'm going to share with you guys why I changed my mind on it and why I recently started adding it to my portfolio, share with you guys all the numbers, we're going to back test it, and everything else in between. So if you're a dividend investor and you're at all interested in ultra high yielders, make sure to stick around, drop a like down below, and let's get right into it. My A to Z dividend investing ebook has helped countless dividend investors get started with their journey. And my custom dividend tracker that I'm constantly using here on the channel has also helped so many investors stay on track and allow them to see their dividend income in real time. Well, today I have another treat for you guys. I'm not only going to offer you my A to Z dividend investing ebook and the custom dividend tracker, but also just for a short limited time, I'm going to be adding in my brand new weekly dividend blueprint ebook to show you how you can get started with weekly dividend ETFs and add this into your investing strategy. This offer is not going to last long, so go ahead and click the first link down below in my description, and you're going to get both ebooks and the custom dividend tracker bundle. But like I said, please act fast because this won't be around for long. Now let's get back into the video. Now, the ultra high yielding ETF that I as of recently once again got interested into and actually started adding a very small but steady amount into my portfolio is none other than YMAX, or the YieldMax Universe Fund of Option Income ETFs. Now, YMAX currently offers a 72.9% distribution rate, so this is definitely in the ultra high yield territory. Now, early on when YMAX started trading, I sort of wrote it off as something that wouldn't really match what I'm looking for, just because for a while there, I wasn't super interested in having exposure into some of the ultra volatile names that names like YMAX hold on to. But as this year is shaping up, I do want to have at least some exposure to those names. Along with that, I do want to have a little bit more of ultra high income exposure in my portfolio, just because I'm currently 32 years old. Even if a few of the positions in my portfolio blow up long term, I still want to take a little bit more risks here and there. Now, another reason I decided to start buying some YMAX at least slowly, which I've been doing as of recent, is because, like I said a minute ago, I do want to have some exposure to some ultra volatile names like Meta, Google, names like Palantir, Nvidia, etc. But I also want to have some exposure to those names through a high income strategy. Now, here's the cool thing about YMAX, and this is why it matches exactly what I'm personally looking for. YMAX holds on to several of these different names all at once. So even if one of them or two of them have a bad week or maybe a good week, the entire ETF is somewhat at least diversified, which is honestly exactly what I've been looking for. Now, again, because I don't necessarily know if I want to hold on to something that offers ultra high income exposure to Meta or Google or Palantir or Nvidia, I'm not exactly sure. A name like YMAX is going to offer a nice mix of exposure to some of the ultra volatile names, and I can kind of sit back and let them do their thing. Now, another reason I changed my mind and started grabbing some shares of YMAX over the last week or so is because I was doing a little bit of digging, some more research into the ETF and back testing some of the numbers. And because this ETF pays out on a weekly basis, doing some basic math, this ETF has been generating a massive amount of income, especially considering where it's trading at as of current. Now, the last several weeks have been anywhere from 18 cents to 10 cents to 13, 14 cents, 15 cents. Even on the low end of things, on average, this ETF is still offering a massive yield for investors annualized out. Now, of course, when I was digging around doing some research, I had to back test YMAX total return, which is dividends plus price return or price decay all included. Now, the crazy thing is that since the beginning of 2024, YMAX has not only offered investors a nice positive total return, but maybe more impressively has offered a larger total return compared to the SPY. Now, again, I'm not saying that YMAX is going to outperform the SPY in 2025, 2026, and beyond. Of course, I don't know what's going to happen, but some of the names that YMAX does have exposure to do have the potential to grow a lot in a very short time frame. Because of their high implied volatility characteristics, there is a massive amount of income to be had when it comes to names like this. So again, I've been seeing a lot of investors sort of hating on some of the high yielding products, and I get it. Some of them seem a little bit ridiculous, and maybe some of them will turn out to be that way. But the numbers are the numbers, and at least over multiple time frames, not only YMAX, but lots of these other ultra high yielders that do offer exposure to some of the best names throughout the markets have actually been outperforming some of the benchmarks, some of the names that are almost impossible to outperform, like the SPY. Now, because YMAX does offer exposure to some very volatile names, I know that this ETF's total return can change in the blink of an eye. But again, at least for a small portion of my portfolio, I mean a very small portion, I'm going to bet that there is an opportunity to make some money with this one in the next year or two. Now, let's talk about some of the bad parts about YMAX. Obviously, this ETF has decayed like crazy over time. It's down around 35% as far as price return goes since inception. Now, a lot of these ETFs that do offer exposure to some ultra volatile stocks. And then utilize an option strategy, there's going to be the potential for a massive amount of income generation. And as long as some of the ultra volatile names that YieldMax has exposure to plays nicely over a certain time frame, like we've seen since April, the ETF not only has the potential to pay you massive amounts of income every single week, but also, as you can see right here, since April, at least as of right now, the ETF is up around 10% as far as price return goes. Now the problem is that when those underlying names drop in price very sharply, which of course can and will happen at times, names like this that offer exposure to those names not only will drop along with it, but it's going to be very, very tough to recover because, of course, of that option strategy. So my personal play with YMAX is going to be pretty simple. I'm going to slowly gather more and more shares over the up and coming weeks and hopefully gather as many shares as possible, as cheap as possible. And then the idea from there is that within 1 year, maybe to 2 years, if the income generation stays somewhat of where it is currently, and if the market stays somewhat volatile, I think it has a chance to do so. I could be paid back my entire initial investment of all the shares I bought into with YMAX and then be playing with the house's money within a year or two. Now, over the next year or two, could YMAX drop down to zero? Could the income be cut in half? Could anything happen? Well, of course. But again, with a very small portion of my overall portfolio, I do want to take some very small yet calculated risks because I do think there is some opportunity with some of these ultra high yielders, but again, just a very, very small few of them. So I hope that gives you guys an idea on why I'm going to be adding more and more YMAX to my portfolio. I do want some diversified exposure to some of these ultra high yielders just because I don't necessarily want just one or two in my portfolio. Now, again, I would not consider myself an ultra high yield income oriented investor. My portfolio is full of things like Apple stock, Verizon stock. I mean, I have a little bit of everything in my long-term portfolio as of right now. But like I said a few times now, I do think there is a unique opportunity with some of these weekly payers that offer the potential for massive income generation and stable NAVs if the market plays nicely over the next year or so. So now that we talked about YMAX, the YieldMax Universe Fund of Option Income ETFs, I want to hear from you guys down below. When it comes to ultra high yielding ETFs, which other ones should I look into to potentially add to my portfolio along with this? Let me know in the comments down below. If you guys enjoyed this video, make sure to please drop a like in it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.